Next, we travel to Tampa Bay, Florida, where the air of optimism is fading slowly. In June 2025, home prices have dropped nearly 6% year over year. Economic analysts point to unprecedented new construction as a factor driving down values. These developments, though promising in their own right, have overwhelmed the market, creating a surplus of homes that buyers cannot absorb at previous price points. In a nation gripped by economic uncertainty, an ominous trend takes center stage. Today, we delve into the unfolding crisis that many experts are calling the 2025 housing crash. The statistics are striking. The warnings are clear. What does this mean for homeowners, potential investors, and policymakers? The answer carries profound implications. Our journey begins in Austin, Texas, a city once celebrated for its booming tech-driven growth. Now, in May 2025, nearly 14% of home listings in Austin are at risk of selling at a loss. Homes purchased during the COVID-19 pandemic have shown particular vulnerability. Experts warn that this rise in financial risk could trigger broader economic consequences. Austin's skyline may glisten, but behind the scenes, market fundamentals are eroding. The numbers have shifted, portfolios are shrinking, and the future casts a long shadow over this once celebrated hub. In just a few moments, you will be introduced to a detailed investigation of 10 U.S. cities where market conditions are rapidly deteriorating. Here, where sunlit shores meet troubled statistics, the local economy faces growing headwinds. The delicate balance between supply and demand has tipped into uncertain territory. In San Antonio, Texas, the situation is just as concerning. Data from May 2025 reveals that approximately 10% of listed homes are at risk of selling at a loss. Ranking fifth among the 50 largest U.S. metro areas, this metric underscores a worrying trend. The median home price in San Antonio sits at $302,500, while the median household income lingers around $55,000. This affordability gap has not only dampened buyer enthusiasm, but also exposed vulnerabilities in the local housing market. The struggle is real, and the community braces for continued turbulence in an increasingly volatile economic climate. Moving on to San Diego, California, the post-pandemic market tells a different, yet equally concerning story. A recent Redfin report shows that roughly 2.7% of home listings are at risk of financial loss. Many buyers who once believed in the lasting benefits of investing in property now find themselves staring at potential losses. San Diego, known for its vibrant culture and high cost of living, is witnessing a painful readjustment of market expectations. These trends are not isolated incidents, but rather signals of a broader economic shift that demands attention. As we broaden our lens, we now arrive at New York City. The heartbeat of finance and culture in America, New York has historically weathered economic storms. Yet even here, unsettling signs emerge. Recent data indicates that certain districts in Manhattan and Brooklyn are experiencing a subtle decline in property values. While specific percentages vary by neighborhood, the overall trend fuels concern among real estate experts. The city's dynamism is challenged by a precarious balance of high demand and saturated market conditions. Investors and homeowners alike must now face the stark reality of shifting market tides. Chicago stands next in our exploration. This city, known for its resilience and industrious spirit, is now counted among the cities confronting significant market stress. Reports suggest that while Chicago's housing market has not yet seen catastrophic price drops, increased listings and bidding wars have given way to a more subdued buyer enthusiasm. This emerging coolness in a once red-hot market sets the stage for another domino in America's housing conundrum. The experts believe that Chicago's market could soon feel the ripple effects experienced in other regions if current trends continue unabated. Turning our focus to Los Angeles, California, we encounter a city where glittering facades mask deep-seated contractions in market stability. Los Angeles, with its sprawling neighborhoods and diverse real estate landscape, has seen pockets of significant price decline. Neighborhoods that once promised steady appreciation are now reporting lower than expected valuations. Some industry voices have noted that oversaturation from luxury developments and a shift in buyer priorities have played pivotal roles. Los Angeles now finds itself reassessing the narrative that once guaranteed prosperity. The warning signs are clear. If unchecked, systemic vulnerabilities could widen the gap between expectation and reality. Philadelphia, Pennsylvania, rounds out another chapter in this complex story. A city with rich history and evolving modernity, Philadelphia's housing market is experiencing a slow yet definitive downturn. Homeowners are increasingly aware of the looming threat as market data reveals subtle yet persistent declines in property values. The interplay of local economic challenges combined with national headwinds paints a picture of a market in distress. In Philadelphia, the balance of historical charm and volatile modern finance creates an environment ripe for caution and reevaluation by both sellers and buyers. The city of Miami, Florida, brings yet another perspective. Known for its international flair and booming tourism, Miami has not been immune to broader national trends. Recent figures indicate that Miami has seen a decrease in buyer activity, with price adjustments reflecting a market recalibration. As new construction continues and buyers recalibrate their expectations, Miami is experiencing a cooling period that many fear could presage further declines. The reality for many in Miami is that yesterday's promises of unending growth are now being questioned by today's hard statistical evidence. The city braces for changes that may redefine its housing narrative for years to come. Finally, we venture to Seattle, Washington, a city synonymous with tech innovation and rapid change. Yet, Seattle's housing market reveals similar strains. Ongoing surpluses and shifting demand patterns have nudged home values downward. Despite the city's booming technology sector, the balance between price growth and market saturation has begun to tip unfavorably. In Seattle, homeowners face uncertainty as local conditions challenge the optimistic projections that once defined the region. The steady pulse of innovation is momentarily overshadowed by the palpable stress of a market in transition. Throughout these 10 cities, a recurring pattern emerges. From Austin's soaring risk percentages to Seattle's emerging downturn, the 2025 housing crash signals a nationwide shift. Each city, with its unique economic landscape, contributes a chapter to this unfolding narrative. Factual data, rigorous statistical evidence, and first-hand expert commentary converge to illustrate a crisis of confidence in the American housing market. This investigation is more than a mere compilation of statistics. It is a call to examine the underlying economic conditions that bind our nation's real estate markets together. The narratives from each city reveal that the crisis does not rest on isolated events. Instead, it is woven into the fabric of a national economy facing significant challenges. When nearly 6% of homes nationwide risk selling at a loss and affordability gaps widen in cities like San Antonio, each data point deepens the broader picture of financial vulnerability. In every corner of this country, community members, investors, and policymakers are confronted with the urgent need to reassess their strategies. Behind each percentage point and fluctuating median are real people coping with rapidly changing economic circumstances. The data is clear, and the warning is urgent. Watching these trends, one cannot help but question what the long-term implications may be. The delicate balance of supply and demand, once stable, now teeters on the brink of a significant recalibration. This turning point compels us to reflect on the interconnected nature of housing, employment, and local economic vitality. A housing market in distress has ripple effects on communities, schools, and the very fabric of local culture. The cities discussed today each provide a window into these complexities. Experts across the board emphasize that awareness is the first step in mitigating future losses. By understanding these shifts, homeowners can plan more carefully, investors can adjust portfolios, and policymakers can pave the way for corrective measures. This is a transitional period that calls for vigilance and proactive strategy. The data not only informs us, but also serves as a catalyst for deeper inquiry into how we handle economic adversity in future housing cycles. While the outlook remains challenging, this report also serves as an invitation. It invites us to listen closely to the voices of experts, to scrutinize the data unfolding before our eyes, and to engage with our communities on a level that moves beyond headlines. The narrative of the 2025 housing crash is evolving in real time, and understanding it is essential for shaping resilient, future-proof policies. As we conclude this investigation, the overarching message is one of awareness and reflection. The 2025 housing crash is not a distant, hypothetical event locked in the future. It is happening now. The signs are visible in our cities, etched in the markets of Austin, Tampa Bay, San Antonio, San Diego, New York, Chicago, Los Angeles, Philadelphia, Miami, and Seattle. Each location provides compelling evidence that the American housing market is at a crossroads, a pivot point between past growth and uncertain economic terrain ahead. In closing, reflect on these critical insights and prepare for a period of uncertain transition. The facts leave little room for complacency, and the call for well-informed, deliberate action grows more urgent each day. Stay informed about the evolving housing market trends in your area to make well-informed decisions regarding buying or selling property.